G'day everyone, Fat Peter here. My brother Sydney Peter is still researching tax law, which I'm pretty sure means lying on the couch scrolling TikTok, but I can't prove it. So once again, you're stuck with me. Now, before we get into it, thank you to everyone watching this channel. If you watch and don't hit like, may your tax return be slightly better than last year. If you watch and hit like, may the ATO owe you money. See? I'm basically a financial advisor now. Right. A few of you messaged me saying, Peter, can you do an episode on SMSFs? All my mates are talking about them at barbecues and I'm just standing there nodding like I understand, while secretly wondering if SMSF is a type of sunscreen. So here we are. Special episode. Let's talk self-managed super. Meet Dave. Dave's 52, runs a plumbing supplies business in Western Sydney. Been at it 18 years. Got about 650 grand in super. Not a fortune, not nothing. He's comfortably in what I call the zone where your accountant starts returning your calls. Now, Dave's got this mate Gazza who set up an SMSF 3 years ago. Gazza used his to buy a warehouse and lease it back to his own business. Mate, the tax savings. Gazza won't shut up about it at every barbecue. Oh, another snag? Don't mind if I do. Speaking of which, did I mention my SMSF saved me 15 grand this year? Every single barbecue. So Dave rocks up to me and goes, Petty, should I get on this SMSF thing? And I said, Dave, mate, sit down. How much do you reckon an SMSF costs to run each year? I dunno, like $600. Dave, we need to talk. All right, let's start with what an SMSF actually is. Regular super, your industry fund, your retail fund, is like flying economy. You get a few options. Chicken or beef, window or aisle, balanced or high growth. That's it. You don't get to call the cockpit and say, actually, I'd like to invest in lithium miners and a commercial property in Penrith, thanks. An SMSF is like being the pilot. You, plus up to 5 other family members, are the trustee. You decide what to invest in. ASX shares? Go for it. Commercial real estate? Yep. A diversified portfolio of ETFs? Sensible. Bitcoin? Technically yes, but please ring your accountant first. I am begging you. Sounds incredible, yeah. Now here's the part where I ruin it. Because that's literally my job. Ruin number 1, the cost. The ATO's latest numbers. Median SMSF running cost is $9,300 a year. Audit fees, accounting, tax return, valuations, it all adds up. And that's before you count your own time. Trustees average 8 hours a month on SMSF administration 8 hours. That's 2 rounds of golf. That's watching the entire first season of Bluey with your kids. That's a lot of hours you could spend doing literally anything else. If your super balance is under 500 grand, the fees alone will eat you alive. You'll spend a year running your own fund and finish behind the boring industry fund you left. It's like quitting your job to start a business, working twice as hard, and earning less. Nobody wants that. Dave's got 650. He's over the line. But barely. I told him, you're not rich enough to be comfortable. You're just rich enough to not embarrass yourself. The SMSF sweet spot starts at about $1 million. At 650, you're what I'd call SMSF adjacent. Ruin number 2, compliance. And this is where people get absolutely wrecked. SMSFs have a rule called the sole purpose test. Fancy name, simple concept. Every dollar in the fund exists ONLY to fund your retirement. Not your kids' school fees. Not a holiday to Bali. Not a business loan to yourself because cash flow's a bit tight this month. The ATO will come knocking. And not the friendly, hey just checking in kind of knocking. The please bring all your documentation and maybe a lawyer kind. Then there's the in-house asset rule. Loans and investments in related parties can't exceed 5% of the fund. Cross that line and the ATO puts you on a rectification plan. Ignore the plan. Penalties, on you personally, not the fund. Keep ignoring. The fund loses its tax concession and your assets get taxed into oblivion. But here's the good bit. The legal bit. The bit that Gazza won't shut up about at barbecues. You can use your SMSF to buy a commercial property and lease it to your own business. Totally legal. The catch, and there's always a catch, the rent must be market rate. You can't charge yourself $50 a week because it's my right hand paying my left hand. She'll be right. The ATO does not subscribe to the she'll be right philosophy. Market rent.
Προπέλεαζα.
Arm's length. Every time. Dave's ears pricked up at this. His company's been paying 70 grand a year renting a warehouse from some bloke in Parramatta. Pete, you're telling me I could be my own landlord? That's exactly what I'm telling you, Dave. Righto. How? Righto. The how-to. I'll keep it tight. 1. Choose trustee structure. 2 options. Individual trustees, cheaper, but a headache if you ever want to add or remove members. Every change is paperwork. Corporate trustee, costs a bit more upfront, but way cleaner. Single member with a corporate trustee. You're the sole director. Easy. 2. Get a lawyer to draft the trust deed. This is the SMSF's constitution. Do not Google free trust deed template Australia. The template you find will be older than your youngest kid and about as useful as a screen door on a submarine. 3. Register with the ATO within 60 days. Get your ABN and TFN. Every trustee signs a declaration within 21 days. Keep it. Forever. Lose it and the ATO will fine you for losing a piece of paper you signed years ago. Welcome to Australia. 4. Separate bank account. In the fund's name. Not your personal everyday account. Every dollar in and out is auditable. Don't mix them up. Your auditor will thank you. Actually, they'll still charge you, but they'll be less annoyed about it. 5. Write an investment strategy. Not a single A4 page saying buy shares and property, I guess. The ATO is actively reviewing these now. They want specifics, risk tolerance, target allocation, liquidity needs, insurance consideration. 6. Set up an electronic service address for SuperStream. Without this you can't receive rollovers from other funds. 7. Move your money across. And for the rest of your life, lodge your annual return on time. Get audited every year. If your return is more than 2 weeks late, the ATO can freeze your entire fund. Can't add money. Can't take money out. Can't do anything except panic and call your accountant. 85,000 SMSFs haven't lodged their 2023 returns yet. That's more people than the population of Geelong. Don't be part of that statistic. All right, numbers. The 2026 to 27 ones. Write these down or just rewind the video. Concessional cap, 32,500. That's what you can put in pre-tax. Inside the fund, it's taxed at 15%. If you're on the top marginal rate of 47%, that's a 32-cent saving on every dollar. Maths. Non-concessional cap, 130,000. After-tax money. No deduction, but investment earnings still taxed at only 15%. Bring forward rule. If your balance is low enough, you can dump in up to 3 years of non-concessional caps in one hit. 390,000 maximum useful if you sell an investment property or get an inheritance. Carry forward concessional contributions. If you haven't used your full cap in the last 5 years and your balance is under 500k, you can catch up. Free money from the government. Take it. Transfer balance cap, 2.1 million. That's the max you can shift into tax-free retirement phase. The rest stays in accumulation and keeps getting taxed. And a new one from July 2026. Division 296 tax. An extra 15% on earnings from super balances above $3 million. If you're sitting on $3 million super, honestly, you're doing fine. This tax won't ruin your day. If you're not, and Dave is definitely not, you can ignore it. Dave's response, 3 million? Mate, I'm 3 entire Daves away from 3 million. So, Dave's verdict, 650 in super. Got a business that can lease a commercial property. Happy to spend the time. For Dave, SMSF makes actual sense. He sets up a corporate trustee, rolls in his super, buys a warehouse out west, leases it to his own plumbing supplies company. Market rent. Prupe paperwork. The rental income taxed at 15% instead of 47%. Just on rent, he's ahead nearly 20 grand a year, before we even talk about shared dividends or capital gains. But if you're like Dave's nephew, 28 years old, 40 grand in super, renting a sharehouse in Marrickville, doesn't even know what his industry fund is called, please, stay in your industry fund. Pick the low-fee option. Check it once a year when you do your tax return. For the love of God, do not set up an SMSF just because Gazza won't shut up about his at the barbecue. 3 things to remember. SMSFs only stack up financially above about 500 grand. The compliance is real. The ATO's got its eye on everything from dodgy valuations to mates rates rent. But done properly, with the right advice, it's one of the smartest tax structures available to Australians. Smart tax planning. Not tax evasion. The difference between the two is the difference between claiming a deduction you're entitled to, and making up a home office that doesn't exist. Don't be the second one. An SMSF is like owning a boat. Everyone who has one tells you it's amazing. What they don't tell you is how much maintenance it needs, how much it costs to run, and that if you ignore it for 6 months it turns into a very expensive problem. But if you actually use it properly, maintain it regularly, and know what you're doing, it'll take you places the ferry never could. That's the SMSF special. Hope it helped. Next episode we are back to the regular program, BAS statements. The thing every small business owner dreads. GST collected, GST paid, and the quarterly date with the ATO that nobody wants. So many people cop fines on their first BS simply because nobody explain how it works. We'll fix that. Thanks for watching. Hit like if you learned something. Hit subscribe if you want your tax refund to come through faster. I can't actually guarantee that, but it can't hurt, can it? I'm Fat Peter. Still filling in for my brother. He says he's nearly done his research. Sure, mate. Like, subscribe, see you next time.